Hello, friends. I have been seeing a lot of questions in the comments lately, and I also notice many new people joining this channel. So today, I want to revisit something that comes up all the time. There are 5 bills that a large number of seniors are legally exempt from paying right now in 2026. And the reason most people are still paying them has nothing to do with not qualifying. It is because nobody sends a letter, nobody makes a call. The money just keeps leaving your account every month because the whole system is set up so that you have to ask first. Today, I am going through all 5 in simple language with exact steps and phone numbers. If you have watched this channel for a while, some of this will sound familiar, but a couple of the rules changed this year, and I want to make sure everyone has the full picture. Before we get into it, subscribe right now and turn on the bell. When rules like these change, I cover them here first. Subscribe now and let's get into it. Let's begin with the bill that comes straight out of your Social Security check every month, and that a huge number of seniors are paying even though they legally do not have to. If you have federal income tax withheld from your Social Security payment, that withholding is based on a W-4V form you filed at some point, where you chose a flat percentage, 7%, 10%, 12%, or 22%. The SSA has been applying that rate to every check ever since. They have not reviewed your tax return. They have not checked whether your income changed. They are simply following the original instruction month after month. So, is your Social Security actually taxable? Add up all income outside of Social Security: pension income, IRA withdrawals, interest, dividends, and any part-time work. Then add any tax-exempt interest. Then add 50% of your annual Social Security benefit. If that total is below $25,000 for a single filer, your benefits are not federally taxable. For married couples filing jointly, the threshold is $32,000. Below those amounts, any withholding you have set up is just a prepayment of a tax you do not owe. The fix is simple. Download the W-4V form from irs.gov. Choose 0 or a lower rate and send it to your local SSA office, not the IRS. SSA processing usually takes 30 to 60 days. Bill number 2 is brand new. It expires in 2028, and too many people are either missing it completely or not claiming the full amount. The One Big Beautiful Bill, signed in 2025, created a new senior-specific deduction that stacks on top of your existing standard deduction and the current age add-on for being over 65. If you are 65 or older by the last day of the tax year, you can deduct an additional $6,000 from your taxable income. For a married couple where both spouses are 65 or older, each spouse gets the full amount. So that is $12,000 total, not a shared amount. It is claimed on Schedule 1A, and it phases out gradually for single filers above $75,000 and for couples above $150,000. Below those thresholds, you get the full deduction. Here is what concerns me based on what I am hearing in the comments. Tax preparers who have not fully updated their workflow for the 2025 tax law changes are missing this. Software that has not been updated is missing it too. If someone else prepares your taxes, say these exact words before you file. Did you apply the new senior deduction, the $6,000 or $12,000 if we are both over 65? Make them answer that question directly. This deduction runs through the 2028 tax year and then expires unless Congress extends it. That means this year, next year, and the year after are the window. Do not let it close without using it. Bill number 3 is the one I want to spend the most time on because the numbers here are the largest, and the gap between who qualifies and who is actually enrolled is huge. Every month, $22.90 is deducted from your Social Security check before you even see it. That is the standard Medicare Part B premium for 2026. For millions of seniors, that money does not need to come out of their check at all because there is a group of federal programs called Medicare Savings Programs that pay the premium for them. Most people who qualify have never heard of these programs, and as a result, the money keeps leaving their account every month for years. The most comprehensive of these programs is called QMB, Qualified Medicare Beneficiary. If you qualify for QMB, the program pays your full Part B premium, your Part A premium if you owe one, your deductibles, and your coinsurance and copayments. Your out-of-pocket Medicare costs can drop essentially to zero. In 2026, the income limit for QMB is $1,350 per month for a single person and $1,824 per month for a married couple. Those are the national figures, and some states use slightly higher limits. Here is the part that trips people up on the income calculation. The first $20 of most monthly income does not count. If you earn any part-time income, the first $65 of that is also excluded, which means your actual gross income can be a little higher than those threshold numbers, and you may still qualify. A single person receiving $1,350 in Social Security might actually have gross income of $1,370 and still be under the counted limit because of the $20 disregard. If you are anywhere near those numbers, it is worth applying and letting the state calculate your exact eligibility instead of assuming you do not qualify. There are also two higher income tiers, SLMB and QI, that cover the Part B premium only for people who earn a bit more than the QMB limits. SLMB goes up to $1,616 per month for a single person and $2,184 for couples. QI goes up to $1,816 for singles and $2,455 for couples. All three programs also enroll you in extra help for prescription drugs, which caps what you pay per medication at $5.10 for generics and $12.65 for brand name drugs in 2026, regardless of the retail price. There is also an important rule change from April 1, 2026. If you financially support adult children or grandchildren who live with you, they now count toward your household size for MSP eligibility. A bigger household size means a higher income limit, which means some seniors who were just over the line before April may now qualify under the updated calculation. Roughly 10 million people are enrolled in these programs. Independent estimates say several million more are eligible and have not signed up. Not because they were denied, but because they never knew to ask. When you call, use these exact words. I want to apply for a Medicare Savings Program. I think I may qualify to have my Part B premium paid. That sentence starts the process. The number is 1-800-MEDICARE, which is 1-800-633-4227. Bill number 4 is one homeowners overpay every single year, and it has nothing to do with Social Security or Medicare. Property taxes. Every state in the country offers some form of property tax relief for homeowners age 65 and older. Some states reduce your home's assessed value before the tax rate is applied. Some freeze that assessed value on the day you qualify, which means your bill stops climbing even while your neighbor's bills keep rising. Some allow full deferral until the house is sold. Texas seniors get an additional exemption plus a freeze on the school tax portion. Florida has significant reductions for long-term residents, with some counties offering even more based on income. New York recently expanded local authority to reduce assessed value by up to 65% for qualifying seniors. Oregon, Minnesota, and Massachusetts offer deferral programs where the tax accumulates as a lien, but you pay nothing while you live there. Same pattern as everything else on this list. Not automatic. Your county assessor knows your age. They will not apply the exemption for you. In most states, the filing window opens in January and closes around April 1st to May 1st. Miss it, and you lose the entire year with no recovery. If you have owned your home for years and never applied for a senior exemption, you may have been overpaying the whole time. Call your county assessor. The number is on your property tax bill. Ask, What senior property tax exemptions, freezes, or credits am I eligible for, and what is the deadline to apply for next year? Write that deadline on your calendar immediately. Bill number 5 is for seniors who are paying a higher Medicare premium than the standard rate and do not realize that one free form can fix it. If your income in 2024 exceeded $106,000 as a single filer or $212,000 as a married couple, Medicare added an IRMAA surcharge on top of your standard Part B premium. That can range from about $70 to more than $400 per month per person. Here is the trap. Medicare uses your tax return from 2 years earlier to set your current premium. Your 2026 premium is based on your 2024 income. That income may no longer reflect your actual situation at all. This hits hardest when 2024 was an unusual year. You sold a house. You took a large IRA withdrawal. Your spouse passed away. Your household income changed sharply. Any of those can push your 2024 income into a surcharge bracket. And if your income has since fallen, you are still paying a higher premium based on a year that no longer represents you. The form is SSA-44, 1 page, free to file. You send it to Social Security and explain that a life-changing event reduced your income after the year Medicare is using. If approved, they recalculate using your current income instead. Call 1-800-772-1213 and say, "My income dropped after 2024, and I want to file Form SSA-44 for a life-changing event to have my Medicare premium recalculated." Bring documentation, retirement date, final pay stub, real estate closing papers if applicable. So here is the complete rundown of all 5. 1. If you have Social Security tax withholding set up, and your provisional income is below $25,000 single or $32,000 married, file a new W-4V to stop the withholding. 2. Make sure whoever handles your taxes has applied the new $6,000 senior deduction, or $12,000 for couples, before you file this year. 3. Call 1-800-633-4227 and ask to apply for a Medicare Savings Program to have your $22.90 monthly Part B premium covered. 4. Call your county assessor and ask about senior property tax exemptions, freezes, and filing deadlines. 5. If you paid an IRMAA surcharge based on a high-income year that no longer reflects your situation, file Form SSA-44 with Social Security to request a premium recalculation. None of these requires an attorney. None of them costs anything to file. Every one of them requires you to start the process, because none of these agencies is going to call and tell you the money is available. Subscribe. Share this with someone you know who is on Medicare or Social Security.